Okay, so you know Warren Buffett, right?
Yeah.
This guy's a legend in investing.
Yeah.
And his company, Berkshire Hathaway, has just delivered incredible returns.
Absolutely astonishing.
Yeah. I mean, since he became CEO like 60 years ago,
Yeah.
Berkshire Hathaway Class A shares are up like 6,340,000%.
It's credible.
It's unbelievable.
Yeah.
To put that into perspective, the
Yeah.
S&P 500
Right.
over the same period is up about 37,300%.
Yeah, it's just a phenomenal track record.
It's crazy, and that's why we always pay attention to what
Exactly.
he's doing
Okay,
and what
yeah.
Berkshire's doing.
Absolutely.
And that kind of brings us to our deep dive today.
Hook.
I'm sure you've been wondering this too.
Yeah.
Why is Berkshire Hathaway sitting on so much cash right now?
Yeah, the big question.
I mean, at the end of 2024,
Right.
they had a record $334.2 billion
Wow.
in cash, cash equivalents, and U.S. Treasuries.
Yeah.
I mean, for a company known for investing, that number just makes you think.
It really does make you wonder what's going on.
It does, and that's what we're going to unpack today.
Okay, sounds good.
We're going to be looking at this article from the Motley Fool, published just recently on March 21st, 2025.
Okay.
And it kind of gives us some clues, all right?
Right.
$334.2 billion.
Yeah.
Let's just think about that for a second.
It's a huge number.
It's a lot of money
Yeah.
for a company like Berkshire, which is basically an investment company,
Right.
to have all this cash on hand.
Yeah.
I mean, it seems kind of strange.
A little paradoxical, isn't it?
Yeah, you'd think they'd be putting that money to work.
Exactly. You'd expect them to be actively investing it, not just holding on to it.
Right. What's the story there?
Well, I think you've hit on a really important point.
Okay.
Usually when an investment firm has a ton of cash like that,
Mm-hmm.
it could mean they just don't see any good opportunities in the market.
Okay.
And it seems like that's a big part of what's happening here. The article points out this pretty significant trend that's been going on.
Okay.
Buffett has been a net seller of stocks
Okay.
for 9 quarters in a row,
9 quarters.
starting back on October 1st, 2022.
Wow, that's not just like a short-term thing.
No, that's a sustained period of selling.
Right, so he's not just not finding things to buy.
Right.
He's actually selling what he already has.
Exactly.
And over that time, he's sold off about $173 billion worth.
It's a significant amount.
Yeah, so that to me is a pretty clear sign about how he sees the market right now.
It is. It's a pretty strong indicator.
Yeah. And what's even more interesting
Yeah.
is that Berkshire's own stock buyback program,
Right.
which they've been doing for a while, I think 24 quarters in a row.
From like mid-2018 to mid-2024.
Yeah, and that totaled almost $78 billion.
It was a substantial program.
But even that stopped in the second half of 2024.
Yeah, that's significant.
That really stands out.
It does.
Because I remember Buffett saying that Berkshire stock was his favorite stock to buy back
He did say that.
when it was at a good price.
Right.
So the fact that he stopped buying it back completely
Yeah.
tells us something about how he sees the price right now.
It definitely suggests he's not seeing it as a bargain at the moment.
Exactly.
And to really understand why he's being so cautious
Yeah,
with the selling and not buying back stock.
right.
I think we need to look at the principles behind his investing,
Okay.
like value investing.
Right. This is like his core philosophy, right?
Yeah, it's not just a theory for him, it's how he actually invests.
Okay. So for people who might not know,
Yeah.
what exactly is value investing the way Buffett does it?
So basically, it's about finding and investing in
Yeah.
what he calls wonderful companies
Okay.
at an attractive price.
Okay.
So he's not chasing the latest hot stocks
Right.
or getting caught up in bubbles.
Okay.
He's looking for companies with really strong fundamentals, a durable competitive advantage that will last over time. And then he waits for the chance to buy their stock
Right.
at a price that's lower than what he thinks the company's actually worth.
Okay.
That's the intrinsic value.
So it's not just about finding cheap stocks.
No.
It's about understanding what the business is really worth.
Exactly.
And I remember that quote he always uses from his mentor, Ben Graham.
Yeah.
Price is what you pay. Value is what you get.
It's a classic.
It's such a simple idea, but it's so important.
It really highlights the difference.
Yeah, you can pay a lot for something that isn't really that good.
Right.
Or you can be patient and wait for a good deal on something great.
Exactly. And the article makes it clear
Okay.
that the main reason for all this cash
Yeah.
is that Buffett thinks value is basically non-existent right now.
In the market as a whole?
Yeah, in the whole market.
Wow, even in his own company.
Even Berkshire Hathaway.
That's amazing.
Yeah, he's just not finding a lot of businesses that meet his standards.
Of high quality and a good price.
Yeah, both those things have to be there.
So he's just waiting for the right opportunities.
Exactly. And that patience is why he has so much cash.
And this brings us to the Buffett Indicator.
Okay.
Can you tell us about that?
Sure. So back in 2001, Buffett did this interview with Fortune magazine.
Mm-hmm.
And he said that the market-cap-to-GDP ratio
Okay.
was probably the best way to see where valuations were
Okay.
at any given time.
So what is that exactly?
So you're comparing the total value of all the public companies in the U.S. to the country's total economic output, which is GDP.
Okay, so it's like comparing the stock market to the real economy.
Yeah, it gives you a sense of whether the stock market's price
Okay.
is in line with how the actual economy is doing.
Gotcha. And how do you actually calculate that?
It's pretty simple.
Okay.
You take the total market capitalization,
Okay.
which is the total value of all the shares of all the public companies,
Mm-hmm.
and then you divide that by the U.S. GDP.
Okay.
And historically, since like 1970,
Mm-hmm.
this ratio has averaged about 85%.
So that's what we can use to compare to.
Yeah, that's the benchmark.
Okay, so where's the Buffett Indicator today?
Well, the article says
Okay.
that the day before the S&P 500 hit its all-time high,
Mm-hmm.
the Buffett Indicator was at 207.33%.
Wow. That's way higher than the average.
Yeah, it's dramatically higher than the 85% average.
So what does that tell us?
Well, it suggests that the overall market is currently very overvalued.
By Buffett's standards.
Exactly.
So basically you're paying a really high price
Yeah.
compared to what the economy is actually producing.
Right, that's the implication.
It's like the price is way out of line with the value,
Exactly.
and it's not just the whole market he's worried about, right?
Right.
The article also talks about Berkshire Hathaway's own stock. So
Yeah.
what's going on there?
As of March 18th, Berkshire's Class A shares
Okay.
were trading at a 74% premium to their book value.
74%.
And if you look at what Buffett has done in the past,
Mm-hmm.
he was happy to buy back shares.
Yeah.
And they were trading at a premium of 20 to 50%.
Okay, so 74 is even higher than that.
Yeah, it's considerably higher.
So the fact that he's not buying them back now,
Right.
even though they're at a 74% premium,
Yeah.
I mean, that really shows how he sees the price.
It reinforces his view that they're not a bargain right now.
Yeah, even his own company.
Exactly.
He's applying the same principles to everything.
Across the board.
But the article does mention some recent buying activity, right?
Yeah, there have been some exceptions
Okay.
to the overall selling trend.
Okay.
Berkshire has been increasing its stake
Mhm.
in Japan's 5 major trading companies.
Okay.
Mitsubishi, Itochu, Mitsui Sumitomo, and Marubeni.
Wow, that's a mouthful.
Yeah,
So he is finding some value somewhere,
it seems so.
even if it's not in the U.S.
Right.
So he's still looking, but he's being picky.
Yeah, very selective.
And there were also some small purchases.
Yeah, according to SEC filings from January and February,
Mm-hmm.
they bought a little bit of SiriusXM Holdings, Occidental Petroleum, and Verisign.
Okay, so some specific companies he likes.
Right.
But the article is clear that those buys are pretty small.
Yeah, compared to the amount of cash they have.
Right, and compared to how much they've sold.
Exactly.
So it doesn't really change the overall picture.
No, the big picture is still one of caution.
So basically, Buffett is sticking to his value investing principles.
Absolutely.
He's got all this cash because he's not finding anything he wants to buy right now
Right.
at a price he's willing to pay.
And that's why he's selling more than he's buying.
And why he's not buying back Berkshire shares.
It all fits together.
So for you listening, this is a good reminder
Yeah.
to stick to your own investment philosophy,
Whatever it is.
even when the market is going crazy.
It's about discipline and patience.
Exactly. And Buffett is a great example of that.
He's willing to sit on all that cash
Yeah.
and wait for the right opportunity.
Even if it takes a long time.
Yeah, he's not swayed by the hype.
It's pretty impressive.
It really is.
So when you think about your own investments and what's happening in the market today,
Yeah.
what does it mean that someone like Buffett is being so cautious?
It's a big question.
It really makes you think.
It does.
It's all about understanding how the market works
Yeah.
and sticking to your principles.
Absolutely.
And it makes you wonder, is Buffett's cash a sign of a future opportunity?
That's a great question.
Is he waiting for prices to drop so he can buy low?
It's possible.
Or does it mean he thinks the market is just way too expensive?
Yeah. And there's just not much value out there right now.
It's really interesting to see how this all plays out.
Yeah, it's a fascinating example of market dynamics and real-world investing.
And it's something for all of us to think about.
definitely food for thought.
Thanks for listening to The Deep Dive.
Thanks, everyone.